See, the airline is on the brink of survival. Just because you've survived does not mean you're ready to fly. It's interesting that if you look at the aviation sector in India, there is a, what should I say, there is a boom time right now. And within that boom time, the Tata restructuring continues. SpiceJet has got its own debt issues. And Indigo is in a sense really ruling the Indian skies, so to speak. Now for SpiceJet, if they're able to, let's say, convert their dues into equity, imagine the plight of a minority shareholder. What is the minority shareholder left with? If you're converting debt into equity, debt was supposed to be something which was supposed to be funded by operational cash flows. It is not that you're going to be bloating the equity. If you minute you bloat the equity, that actually from a shareholder standpoint and minority shareholder standpoint, very little value gets created. So while you'll survive, you'll not go belly up. You will be able to, you will be able to restructure the business. But at a time when the sector is going through a boom, why is SpiceJet not really delivered? And the fact that they've done successive QIPs, they've not really managed to attract a lot of investor attention. So I think this news really needs to look into context. While it may have a short-term pop-up effect, I don't think that this is going to be a long-term turnaround factor for SpiceJet, because when you convert debt into equity, you actually are extending the equity base, and EPS is always a function of number of shares you have, and if that goes down, that automatically will have an impact on the ultimate shareholder value. Am I making sense? You've done a CS, you'll understand it better.
Yes, you are making sense that of course equity will get diluted, and that's the biggest point for the equity shareholders, that yes, the debt goes away and the balance sheet gets a breather, but what is left for you on the balance sheet is also something important to track.